Woo! Friday's market killed nearly everyone's portfolio, I think. But we're looking at Cleanspark today, so let's just jump straight in. We'll take a look at this nasty candle here. The main reason I don't like this candle here, it's just really full-bodied. It broke down below this 1479 support level, and then it's slammed straight down to the next one, which in itself isn't a bad thing. The thing I don't like is that it didn't wick back up with any force, which to me gives me a bit of a bearish tilt. If nothing good happens in Bitcoin over the weekend, and that doesn't help lift the miners back up, any bearishness is going to make this one want to hit this Fibonacci level at $12.11, and then we've got the next one under that. We've got the gap fill and the volume shelf at about 1062, which, I mean, if you want to buy more shares, it's great, but if you've been holding for a while, it's probably not ideal. So for me personally, it's a bit of both. I've been holding it a long time and I just want it to do something, but I'm also happy to buy it cheaper if that's the way the market wants to go. I'll rotate some money around and grab a bunch more. The RSI is looking a bit oversold. So from technical levels, it looks like it wants to bounce, but again, it's going to depend a lot on Bitcoin, and the market right now is in high fear. There's loads of FUD going around. Oh, recession. I think it's all a bit premature. It's a lot of the assets that I'm in are already beaten down. They've not yet fully recovered, and since this has happened, they've slid back more. It's been more of a reaction to one day's worth of bad data, and that could change throughout the next month. We don't know. We might see more bad data, in which case it's more downside. But for the most part, I'm not in the large cap stocks, so the earnings season hasn't been too much of an issue for me there, as I'd already rotated out of those. It's just that the breadth of this move is really starting to impact the rest of my portfolio. If we take a look down at the MACDX, the golden cross never really launched, and it switched straight back to a death cross and then started separating again, which is pretty bearish. And retail absolutely dominate this, which is not what we want to be seeing. We want to see the institutional buyers pick it up. Then we've got flow, negative, don't really like that. Typically, when we see these large full-bodied candles, they're normally followed by some sort of follow-through. Prime example here, this green candle, then it followed through with another green candle and took off. Best case scenario, we get a rebound here, a pullback, and a nice inside candle, which would be nice. Given that Bitcoin is up a little bit, looking green, that could happen, but we'll see. Sunday, it tends to be the day it typically makes its larger move, so we'll keep an eye on that one. But if we even scroll back, big red candles, typically followed by more red candles. This looks like it wanted to bounce on the tweezer bottom, and then it had an insider candle, but then it broke down again anyway. Another big red candle followed by a red candle. Happens a lot. If we just keep scrolling, we see pretty much the same thing. Big red candle, another red candle, big red candle, another red candle. So that's something to bear in mind. So based on candle action, that doesn't look the best, but it ruined a really nice flag looking there. It's still kind of inside the pattern, but marginally. Really, we don't want this to break down. It'd be quite a bearish sign if it did, but who knows? I think the weekend will give us a much better idea of that. Again, on the weekly, though, we're still neutral, a bit more whales holding in there, and then flat on the flow. So it could still turn it around and write it off, but it's 50-50 right now for me. I don't really know which way it's going to go. It depends if the market settles a little bit on Monday. Hopefully it does. Okay, looking at the Cleanspark's open options interest, we can see that we really broke past the level of support we had at 15 there, and we're right below that. There's not really anything holding us up market-wise for next week. Resistance, though, still 18. I mean, that would be a heck of a bounce. And the week after, not really anything happening there either. We don't look at the long-dated options on this one just because of the Bitcoin cycle and the possibility that it will be over by then. One thing I did want to go back and mention regarding Cleanspark before we move on to Bitcoin is if we do break below this level and we do start approaching the volume shelf down here at the gap fill, about $10-$50. I'll probably enter a swing trade there with quite a size. My take profit would be probably the peak of this volume shelf here. So that'd be a nice 57% swing trade gain. I'd have very high conviction that was going to close as well, so I'm not too afraid. Although I won't be using leverage because that's not how I will be rolling with miners. I think that's a bit crazy. That's a bit greedy, a bit too high risk. Because whilst I'm very confident of that, I'm also not silly enough to mess around with my risk tolerances. I know the level of risk I like to stick to, and won't be changing that. Moving on to Bitcoin, obviously we've got that ugly red candle that's going to be on most charts, I think. Can't really be avoided, but we did have this really nice wick up action the day before, so this was looking really, really bullish. It still looks pretty bullish to me. It's just going to be, can price action shake things off and do something, to cheer everyone up on Monday. But again, it's just going to be a bit of a waiting game here. It could go either way. It's on this nice little resistance level here. It is below the bull market band, which isn't ideal. So the main thing for over the weekend that I would like is for it to get back into the bull market band and above this little peak here at $62,926,000. That would be my kind of like ideal scenario, and that should give miners a little bit of a pick me up to hold the levels they're at come Monday. And then obviously from there we'll just watch and see how the markets react on Monday. We'll take a look at the economic data that's out next week as well. I think that might be worth taking a look at in this video. Quick sneak peek. But for Bitcoin, RSI is neutral. Golden Cross is looking like it wants to come together now, which isn't ideal. And the whales have been sliding out. We did hit overbought this, so we were expecting some cool off. But this big drop, not great, but like we've been talking about, it's going to be affecting most assets at the moment. And then flow is kind of flat now. Quick look on the weekly. And it looks less horrible on the weekly, actually. It doesn't look too bad still. It's just on this bottom of the bull market band. If we can bounce here, that would be great. So I think Bitcoin's going to be the one that I'm watching over this weekend. I did add to my Bitcoin and Sol positions yesterday as well. I haven't added to Ethereum for a while, as I'm pretty much at the size I want to be on that one. I don't think I'll add much more. Other than that, I think I added Cleanspark and Cypher. The economic calendar for Monday, we've got the services data. This will be quite key to look at. I think the market really wants to see this data coming good and see a bit of strength there. Tuesday, not too much that I find interesting. Wednesday, meh. Maybe the consumer credit change might be quite helpful to know. And then Thursday, more jobs data. That one's probably going to be one to watch out for. And Friday, nothing exciting. What's most annoying about the market situation is that I've been saying for a while that rates need to be cut just to free some stuff up. And when the lags kick in, it's going to be bad. And it looks like the lags are hitting. The main thing I really, really wanted to avoid was a reactive cut. And if the data continues to deteriorate like this, it's going to be a reactive cut. That's not what the market wants. It's not what is going to be good for stocks. It's going to cause some downside. I think we may have missed the boat on that. I think it looks increasingly like that's going to happen and we're going to get a small recession. We really needed to be proactive with cuts, and that hasn't happened. Yes, we were all hopeful. There's still a chance it could happen, but the data really needs to show us something good now. Otherwise, it's happening, and the market's going to slide. So I hope you're DCAing, you're doing your monthly deposits, you're picking good stocks that are likely to recover better. And good luck.